Hi, everybody, and welcome back to Series 5 of the Climate Pioneers Show, Funding a Better Future. Throughout the course of this series, we will be focused on angel investing for impact. And we're going to be digging into why angel investing is such an important part of that early fundraising journey for a founder, and how they can be best prepared for all the challenges that they're likely to face along the way. We're also going to be exploring the lack of gender equity in the world of angel investment, why climate is a wise investment strategy, and how you could begin your own angel investing journey. So whether you're a founder who's looking to raise for the first time, or whether you are an aspiring angel investor yourself who's keen to learn more, there should be plenty for you to get stuck into throughout this series. Today, we are joined by the excellent Anna Sandgren, co-founder and CEO of Unibloom. Anna and her co-founder Vineet successfully raised a round of angel investment late last year, early this year. I think it closed in January, right? And in this episode, we'll be lifting the lid on Anna's investment strategy and learning how she successfully found, engaged with, and closed angel investors, and how she's managing those investor relationships post-raise. So Anna, thank you so much for joining me.
Thank you. Excited to be here.
Absolutely. I just wanted to say really early on, just to be really upfront, I am actually an investor in Unibloom, right? So I witnessed firsthand how organised, diligent, persistent you were when it came to your fundraising strategy. And in our last episode, in fact, the first episode of this series, Ben Keane, one of our guests, said that how a founder manages that fundraising process can really be the thing that tips a potential investor over into investing. And that was definitely the case for me, right? Witnessing how you were managing that process made me be like, wow, okay, this is someone I want to invest in. But before we kind of delve into your strategy and how you manage that and how you did that, are you happy to kick off by sharing with us what Unibloom is? What are you building? How did you found it? What's the story?
Yeah. Unibloom is the first non-climate, climate predictive. Sorry, I was hacking up. So it's a predictive collaboration platform for climate sustainability managers and non-climate experts to bridge the gap between strategy and actions and make sure that future targets and commitments are happening in real time every day. And that's a big pain today in every single company, to combine both the climate efforts and the business efforts. So we combine the financials and highest return on investment with the highest return on investments on every single emission and beyond emissions. So also water and biodiversity and land use impact. Focusing on the consumer goods to start out with, and focusing on sustainability managers and their operations roles around there.
Amazing. So it's like that next piece in the puzzle, right? Is you've got your carbon accounting software, you know what your targets are and what you need to do. This is the next piece. Like, how do you actually turn that into a reality and galvanize people to do it?
Yeah, it's usually one person who lead all this, and that can't be a one-man job. It has to be across the whole organization. So talking to the non-climate experts every day.
Yeah, amazing. And in terms of the fundraising journey, so you founded the business in the Zinc.
Yeah, exactly. So we applied for Zinc 1.5 years ago. I was applying after worked at Unilever and Ben & Jerry's and Seven Generations for almost 20 years. And I found there is a big gap between strategy and commitments and actions. And I saw how middle management struggled with the complexity of data and making the right trade-offs and decisions based upon the spreadsheets and complex data that came into place. And I was like, this will take on forever. And it's burnout from people who kind of face complexity they've never seen before. It's kind of the burnout of companies who can't meet the future kind of, what business need to make happen to not go out of business and missing out on operational income. So I joined Zinc, and I was on a clear mission to I need to drive big impact. I want to help a lot of other companies to invest more in climate as such and transform their business into more sustainable businesses.
Yeah, perfect. And at what time, post coming out of Zinc, when did you know it was time to start raising your next round? Like, what was that trigger point?
Our trigger point, when we came out from Zinc, we were 9 companies that got the first money from Zinc. So we got 80K in kind of just when we had a Figma version, first letter of intent, and like a big idea where we wanted to go to. We had around 6 months. And we said, within 6 months, we want to turn these 3 letter of intents to customers, at least 2 of those to customers, paying customers. We want to have some kind of product that you can use. And And yeah, these were the 2 proof points. So within that 6 months, we were deliberately really working hard to have those customers and serve them fully, developing something from a Figma to a product that they can use and get some value out of. So I know that within that September last year, I needed to start to engage with investors. But I already preceded that before the summer, even if we didn't even have the milestones and proof points on what we wanted to achieve and had achieved.
Perfect. So it was like, I've got these proof points that I need to achieve, but I'm not going to wait to hit them before I start talking to investors.
Exactly.
Sow the seeds, build it. Yeah. Amazing. And how did you start those conversations? Like, how did you know where to go to find people? Who were the right people to have the conversations with? Was there a clear strategy to that, or did it grow organically?
It is a pretty clear strategy on it, I would be honest. You probably do a list of 1,000 investors first.
Wow.
But first of all, you need to know how much you're going to raise. If you do 500 and below, you usually can go to more angels. If you go 500 and above, or almost 1 million, then you can go to the VCs. Mm-hmm. And also, as the climate has been really bad on raising investments overall, I know I was in raising money in 2012, and that was a hard time in a gold exploration business. This time, it was even harder. So I would say everyone was trying to save every penny to what they already invested in. And also, as we just were half a year old, it's not much proof points you can come with.
Yeah.
So 2 years ago, it was much easier to raise money on the valuation you wanted. So it was pretty clear on that, having that 1,000 list in a spreadsheet sourced through who are investing in climate, who are investing in SaaS products, who are investing in female founders. But I didn't look at that in the beginning. I wanted to kind of have the right tech investors, the right climate tech investors, and then finding that match. And then going out to a few that you didn't really say these are important. So you take the ones first that you get the sounding board with, that might not be the right at this stage, but maybe in the future. And then drilling down in a spreadsheet, like who have I contact with, and introductions are extremely important. So you kind of utilize my whole network, like, hey, can you introduce it to this one? Hey, do you know this one? Do you mind introduce? And Zinc was a super valid source of helping us introductions in the beginning, where we put a list of 100 or 200 investors first to kind of that narrow down and say these ones. And then we wrote a short blurb, like, why should you invest? We have succeeded with 2 letters of intent. We have customers already converting, billion, customer in the billion revenue source, NASDAQ listed. So like already built a product. So really kind of hard facts that can get the interest of the investor. So that intro email is extremely important from someone else.
That's so true. And actually, I think you were really good at doing that. And it takes a level of bravery, though, to go out and say, right, who can you intro me to? You pick 2 people from your network that you could intro me to because you think they should be in on this investment. And actually, it's such a simple thing, but it takes a level of kind of confidence and bravery, right? That's a sales technique ultimately, right? And many founders, I guess, don't come from that, or not all founders come from that commercial background where they have that knowledge. Where did you learn that? Is that something you know from earlier in your career? Is it just come to you quite naturally?
I have been selling cars since I was 13.
Right.
So I started selling cars, then I sold on McDonald's, then I sold things, a fintech system when I was 18 to the big bank CEOs, a system that was horrible to sell because it was to the traders. But I was just forced to do it. I was like, that was my role. So I've been and I've been also selling new ideas and starting a female networker when I was 20. So like on that, you always have to kind of sell. And then I raised money for a gold exploration company in Russia, where we didn't have gold. We didn't have the trust, on Russia. And still you have to tell a story that you feel confident about telling. So like you have to prove that you believe in it. And I invested in that business also. So like, there are several things that you have to kind of feel confident about to talk to others about. And I feel really confident to talk about Unibloom because I think it's such an important phase to get into and get more to believe in and take action upon.
Yeah, absolutely. So ultimately, it's a sales strategy, right? And like you said, you've got that strong sales background. Yeah, this is something you believe in more than anything. So yeah, perfect. And you mentioned there about valuation very briefly. How did you go about deciding what a sensible, sustainable valuation for your business was? How did you benchmark that?
One, I looked at all data points from Y Combinator to US to kind of Nordic to Europe. I looked at like, what is it in a pre-seed state? What is it in a seed stage? 1.5 years ago, it was completely different valuations. Secondly, we didn't really put in AI and ML in our, sales pitch, because we know that we are building with that, but not at this early stage, and we need a lot of data to prove that. So we kind of undersell what we are actually delivering.
Right.
But I know that everyone was looking for something with AI and ML in. So I know that our valuation just going down a bit, just based on that. But then, so how we found it was that between what a pre-seed round was around 3 to 5 million, and I said, let's start high, 5 million. Then it's better to negotiate downwards. So I put it in front on a few, like, oh my God. And then suddenly like, okay, what are you ready to pay? And then, of course, it could become a negotiation. And then we ended up on kind of a bit less than I was wanted, but of course, more than average was at that time. And so I think we have a good value for money at the investors in to enter this point, but also reasonable at if you compare to how many other has lost their full valuation during the last 2 years and build up more.
Yeah, fair enough. That sounds very sensible. Perfect. And so how did you balance this strategy then? So you mentioned this strategy of kind of going out and identifying 1,000 people that were either tech investors or climate investors or invested in females and a mixture of those three. How did that, I mean, that must be really time consuming. And then communicating with all of them, following up with all of them. How do you balance that with the day-to-day building of a business? Because was it just, at that time, was it just you and Vineet, maybe one other? Yeah.
No, just me and Vineet.
Just you and Vineet. How did you manage that?
I would say that it's 80 hours job at the early stages a week. Secondly, is that I set very clear targets per week, how many touch points I wanted to achieve, how many people I wanted to talk to, and how was reasonable. Like if I can have 15 pitches or 10 pitches every week, out of those, I assume 3 of those I preferably go for a follow-up with. And then I kind of did that math. And, they're similar to the sales strategy. If you have 100 in your pipeline, you convert 5.
Yeah.
And I know that I needed at least to convert 1 in the beginning. It was a fantastic woman in this booth that I said, are you on? And it was early on. And I was like, are you on? And that was birthday. She's fantastic. And she said, I'm putting in 10. And then after that, you have the first one. Then you can go out and say proudly to others, like, I got investors on. And when you get like the FOMO, and that's the first one. So having that first one that actually is daring to also put that out on LinkedIn or other sharing is just so useful.
Yeah, absolutely.
So managing that time is just, very clearly on Monday to Friday, setting up exactly what you want to achieve, how many you have set in your calendar, how many follow-ups you have, what you learn from that week, and what you kind of iterate to the next. Because the deck as such probably changed 4 times, like the pitch deck. So you have to be ready also to change that.
Yeah. And what did you kind of learn? So in terms of things that you learnt about your business during that process that helped you to refine, what were your kind of biggest learnings?
One thing is that we had to clearly state that we are not a carbon accounting system. And we ended up with putting that on the front page. Because if you haven't been in my role and understand how hard it is to make a decision between climate and financials, and how hard it is to source this data and be able to evaluate different scenarios to find the right pathways toward net zero, it's just, that couldn't be so hard. McKinsey can make that. But making that happen in every single operational role is really hard. So we kind of wanted to build that. And that was hard to explain for people who hasn't really been in those feeds, nor or issues, and like neither in kind of the consumer goods industry, which is very complex on every single decision. It's a lot of products, lot of value chain, lot of consumer behaviors that driving also kind of bad decisions sometimes for businesses. So so the learning was that it's really you have to explain quickly what the problem is. But it's hard when people hasn't really been in these feeds and they just want to hear something. They kind of already have a mental picture of what they want to hear. So one thing was to shift, the first narrative and try to kind of explain where the big challenge is. And that is not solved by, carbon accounting is solving another problem. And they are focused on scope 3 to solve that data problem. And we are solving a collaboration and forward-looking problem where you need to tie a completely different set of data and predictions into that, which are different scenarios. The past is not scenarios. That's what happened. Right? But now you need to predict something that you don't really know. And that's a different ball game. And that's where we said, that's why that's so hard and you postpone decisions. So trying to, shape that in 10 slides, it took many nights, I can explain. And we iterate. So I kind of learnings, took all the learnings every week and tried to look at every single slide to see how can I refine. I got a lot of feedback from a few very grateful investors in the beginning, some female founders, not female investors, like Julie and Carmel and a few others. Pretty harsh feedback, but like, it helps you. We sat the whole Sunday, with Carmel, for example, and like, oh my God, how do we solve this? But like afterwards, you're coming out to a new kind of level. Yeah. And as you're such in an early stage, it's also hard to explain everything because you don't know everything. So it's like you have to pretend and you know what you want to get. And it's like, Tesla on the, when you think of Musk and putting, the rocket on the moon, or like getting with that, it's like, yeah, we want to get there and somehow we are getting there. And you have to explain that very, very simple. So, and now it's hard. So we have to try to, as easily as possible, shape that language, but still make it as, technical enough to understand it is a hard tech play we're building here. It's not. So the second learning was that many connected us to consultancies. And I said, we're not consultancy. We don't want to build that. We are not. So we want to be 90% tech or 100, but sometimes you need to support your customer with the right insights. So how do we build that gig economy for experts within our platform? Instead, with like connecting to other universities, how do you do that? Like trying to avoid all these kind of consultancy pieces that we want to get rid of for our clients to make them build internal capabilities.
Yes.
So these are the things that we find on our road, how to explain for the investors, to try for them to understand that even if the budget holder in this stage is not so much of a sustainability manager because they have small budgets, but they still have big enough budgets because they are alone. So they need to be supported by money and not people at this stage and tools. And that's where the CEO usually have put the money for on the sustainability manager. So that's kind of like, because that was one question, like, but the budget holder, okay, that's not the CEO, but the user is the sustainability manager, and we're building for the users. If the user loves us, then the money will come.
Yeah. Well, that's really interesting. So trying to get that narrative right for people that haven't faced the problem, trying to get them to understand that problem exists.
Yeah.
Yeah, exactly.
And it's easy to put it already into, carbon accounting got 1 billion. Why are they not? Like, no, it's a different problem because we are evolving so fast.
Yeah.
And these are different problems along that journey.
And carbon accounting solves one problem, but it unlocks another one, right? And then this is, solving the subsequent problem. Yeah, exactly. Perfect. And what were the kind of biggest, I mean, you may have already answered it in this preceding question, but the biggest kind of objections, I suppose, that you faced from investors? Was it just that they didn't get it, that they thought it was carbon accounting? Or were there other things that was it how early stage you were, or commercial traction, or what were the other things that you faced in terms of objections?
I think we were extremely proud because we had a 1 billion chicken company on, signed up for our platform to 2024. And we had another 60 million customer in UK and a third chocolate company from Nasdaq, also 800 million. So like what you said, if you read every single kind of have good traction, a strong team, and you're like a strong team. Vinita's over 10 years from Bloomberg, experts in the algorithm piece. I have over 20 years. So like that couldn't be wrong. And even like if you want to have diverse founders, so like tick in a box. Secondly, okay, we have, letter of intent. We have even paying customers from like on a Figma version. So we already proven that we had some revenues. And the third, we have actually a working product that people can use, and you can actually put it in hands tomorrow for more customers. But it's still like the risk aversion across the world was insane.
Yeah.
And that was, I think, like everyone's like, but if I could put my money in here, which is actually more secure right now because they have built more, they are almost on the same valuation as you, even if I'm not sure if they can manage, succeed. I just know that they have built a bit more. So that was one thing. Second is the B2B, because B2B takes time. Right. So all the B2B cycles, like we're focusing on mid to large size companies. So, I had very good conversation with one of the biggest FMCG companies beginning of, in the summer last year. Now there's like, wow, I read the white paper. Anna, can we have a meeting next week? This sounds like you want to be, we can be the design partner. And Stanford University come back like, this sounds good. Now we're ready. Like the process internally just takes time.
Yeah.
So I think that's what people like, I want to have some fast things. And how do you kind of manage that?
Yeah.
We have speeded it up pretty much anyway. So I think that's kind of the risk averse context, the narrative across the world was just bigger than ever. The B2B cycle is one thing. And then as people who believe more in carbon accounting or couldn't find the difference between it.
Yeah.
I think these were the three things. Yeah.
The main things. Fair enough. But you got there. Yeah. When did you close? Was it January in the end?
Yeah, so what we got was actually both Caritza Forum, which is a fantastic kind of worldwide network who kind of said we want to get in. So we opened up for them in February. And then I got Syndicate Room, because and I didn't mention that if you get the super angel on board, then Syndicate Room is a fantastic angel investor network that's kind of follow those. And then it's so simple. So I got them in last week. So, and then I just have one last one here this week that's kind of doing some internal things, but it's an agriculture fund that is amazing to get on. So but I haven't spent, so I shifted focus in beginning of February to really focus on product development and customer development.
Yeah.
But like these are kind of just seeding on.
Yeah.
So Friday I close. Yeah.
It's really exciting. Really, really exciting. And once you've closed, talk us through how you've then, because I think this is something you've done exceptionally well, right? But talk me through how you've managed investor communications, because I've spoken to, I'm very new to angel investing, and I want to get more people doing it, hence why I'm doing this podcast, right? But I spoke to somebody that was a much more experienced angel investor than I am at a dinner about 3 months ago, and he was saying that investor communications piece can sometimes be so frustrating from the investor's perspective, because you'll put money into this early stage startup, you sort of disappear with it, and then maybe you don't hear anything for 6 months, and sometimes they'll come back and just ask for some more. You're like, what did you even do with the last bit? That lack of communication of how the money's being applied and feeling like they're part of the journey along the way. And that investor communications bit is something I think you've done brilliantly. So are you happy to kind of share how you manage that, what you do, what the strategy around that is?
Yeah. The strategy number one was that LinkedIn is a super good forum for me to kind of both share a bit of like the progress, what the positioning in is. So I said like every Friday is a day one. For me, it's like the day one, thinking of the Bezos. I think some of the most brilliant companies in the world has been founded, some brilliant leaders. Like the day one, something new has like shaping it. So I said like the Friday is the day one, where I summarize both a bit of like who we hired, who we work with, customers we've spoken to, or other kind of inspiring and inspiring. So that's one thing to kind of build that external part, to both share with, everyone in our community, including our investors. Secondly is that I have set up a monthly newsletter where I felt like these things has to be covered off. So like the progress on the product. So we have set up very clear milestones, 10 customers, 100 users, 1,000 projects uploaded to 1st of October this year. And I know that's kind of, where we are and where we need to get to. We're not there yet, but like that's where we need to get to. So I'm setting that and so like, how are we progressing? And also be very honest, like these are things that doesn't work right now. How do I get the help? How can you as a community support me? Because I know these angels, including you, are such a brilliant brains. And if I don't kind of find, because you're very lonely as a founder, as a CEO, and like, if I can't find the trust and the community around those angels, who can I do it then with?
Yeah.
Because customers are on the other side, and like these are the ones that, like, you have put in some money in it, and you feel something for kind of either the business mission or the people around it. So I was like, I want to shape that connection, and there's fantastic. So in that strategy, I have that monthly letter where I both also use kind of replicate from my advisory board. So I have a small advisory board where I kind of walk through and kind of get the hard questions from those very experts in this area. And then I kind of replicate a bit of that into, again, with both what I have to supply for SFC, which is more of a venture, investor, where I have to submit anyway, and then trying to kind of be personal and very professional in the letter to the investors to gain, at a certain point, hopefully someone said, oh, I have an idea here, Anna, or I spoke to someone, actually I connect you. And hopefully I can give back also, because I'm also both, have a lot of experience. I've done some small angel investments also. And also I have built a few business before. So hopefully, we're all in the same boat in one way or another. And how can we help each other?
Yeah.
So building that structure helped me to kind of build our business and get the feedback I need to build it.
Absolutely. Because I think you're right. I think one of the things we talked about on the last episode was about, why go to angel investors? Like, why are angels such a crucial or important part of a fundraising process? And one of the things was, if you choose the right angels, you're building out, it's almost like an advisory board to a certain extent. You've got these people that are invested in your business, both financially but emotionally, who want to see it succeed, or invested in wanting to see it succeed, and who've got knowledge, networks, that you can tap into. But quite often founders don't always, they will get the money in and then switch off the fundraising brain and go over here and forget perhaps to always maximize the angels that they've got. But that's something that I think you've done really well, both in terms of keeping in touch and updating, but also, are you happy to share about what you're doing tomorrow?
Yeah. So I felt like, wow, I have so many great brains around me. And I also have my CTO in London right now, because it's been in India for recruitment and so for a while. And I was like, and we have both kind of a prototype for the next phase of our product, and we have the prototype for a new website. And, I want to shape some communication and some, customer engagement. So I was like, who can I use? Like, these are the best brains. They have everything. And I just both want to celebrate the year with Unibloom and also bring some kind of workshop together to kind of look at it from, putting all ourselves in the user's problem phase, and then putting just 2 hours together to see, this is where we have achieved with your start of the money, and this is what we want to accomplish with the money you put in, and then share kind of the roadmap towards next race. Because as building a tech company, we need another round. It's like, we know that. And how do I kind of get the support, get the feedback, and building that up? So bringing, investors, angel investors, and some sustainability experts for 2 hours in the Zinc office tomorrow night. And if you have someone else you want to invite, you're welcome to do that. And then we're doing a hackathon. So not just listening to me, but really kind of doing a hackathon and make your say, at this stage. And then we go back and work with our small team, but just an invitation to use more brains for a very important, moment.
Yeah, I just think that's absolutely brilliant, to get everybody together in one room, get their feedback, show them what the progress is, and then get everybody working together. Yeah, I think that's fantastic. And you mentioned there about, you're a tech company, so you're going to have to raise again. Often, it's not a means to an end investment, right? It's a continual cycle. So what are you happy to share what your plans around that look like, and how do you think your experience of raising this last round is going to inform what you do next time?
The plan is to really prove first the milestones, because that's where we kind of completely focus on now. The product, and the customer, and really kind of shape us as the thought leader in this space to drive climate actions and combine that with, business outputs and outcomes across the organization. Proving that kind of hypothesis and proving that tech can solve that kind of slow process today is the number one goal in the next 6 months. Beside that, we know that we are a SaaS, we're a SaaS platform, so we want to find the right investors across Europe, and prefer, in US also, because we want to expand there at a certain moment. So if we can find some investors in US, that would be awesome. So I would say that just after the summer in August, probably, I will take a first proper stab on start building again the pitch, where we are, how much have we achieved, and the milestones for the next 18 to 36 months. Because next round is really about okay, now hopefully after that we don't need to raise more, because we want to become a profitable business, making driving and growing with our customers. So what do we need to build up that tech team and the climate expertise in our organization? And how much money do we need to do? I have already kind of 1 million, 1.5 that, around 1.5 that we need to get to. And would be awesome if we find some specific climate SaaS investors who are supporting diverse teams. And it doesn't have to be female founders, but have the expertise, who are really scaled, small tech companies to big tech companies, and make a real impact. So really understanding that journey together and be the sounding board together. So I would love to have 3 to 5 of those, 3 coming in, and understanding that it takes time. So, it takes time to really build, minimum 3 years to get the right validation of what we're building. And then another 3 years to really kind of have, the big scale that you can do. I've done it before, so I know it takes time, but we do it as fast as possible. Yeah. So the strategy is to go after summer, start, pre-summer, maybe warm up a few, but if there's some interest, people say wow, this is great, I would love to meet with Anna to see. So it's kind of, you have the pre-dinners, you have a coffee first, because otherwise you're investing in someone you don't know.
Yeah.
Right? So that's where, for sure, I know that, because I was investor myself for a few years within a family office. So I wanted to know the founders. I wanted to understand what they're building. And then, half a year later, wow, now I'm ready, because I see the progress. Yeah. So it is probably just before the summer, starting to find out, building that list again, then looking at which are the markets we go into, where can we find them, and who can introduce us. Yeah. And then secondly, to say, okay, this is the story we want to tell, based upon what we have achieved in such a short time, because it's still very short, a year, that kind of deliver a lot with just a small team still. And then see how we can, close that, I would say, mid-January next year.
Yeah, perfect. You've got a great plan. and to your point there about having a coffee and get to know them, I think that's a really crucial part of it. And I know that's something you do really well through your LinkedIn, right? And you mentioned those day one posts. So every Friday you post what your learnings were from that week, and you're really open and you're really honest. You champion your wins, but you're also really honest and vulnerable about some of the things that were harder. Yeah. But you also blend in the personal, right? Because you are juggling running this business with having young children, and sometimes you're in London, sometimes you're in Stockholm, and there's a lot of juggling going on there. And I think it's really great that you share that. I mean, how it might be difficult for you to know the answer to this even, but how much do you think that personal brand that you've been building and that authenticity on LinkedIn has fed into the success of that fundraising strategy?
I more gain kind of the trust in the expertise area. And I probably got a few that's oh, I saw you, it's interesting to follow you. I haven't really seen anyone directly, okay, this is what, but I haven't done an NPS. I probably should have done that. What was your final, conversion? Why is converted? So it's a good one. I probably will ask. And I love to do the survey to get the feedback to, improve myself. So it's a good one that actually I will do in the next newsletter, to just ask what made you kind of invest? What was the tick of that? But
it's hard to know. It's such an intangible. And whilst it probably wasn't anybody's sole reason, I'd be surprised if it didn't filter in there somewhere, right?
Yeah.
Subconsciously.
And I think, to be very honest, I think the mix where people said like the mix of like a person who really knows the area and kind of the industry, and the person that you have teamed up with who's kind of the algorithm tech person. So like the combo of that plus what you have done before, because I make things happen, right?
Yeah,
but you also build it with trust. So it's like, if I want you in, we can, it's completely like 99% of all startups don't succeed. So of course, it's like the 1%, and I can't promise, but we will do our best to get it going.
Yeah.
So I think that's kind of where people probably kind of found like, oh, this is interesting. Saw how we progressed, followed a few months on, now it's time, because it seems like you're progressing what you're saying you want to do.
Yeah. I think that's definitely one of the subtexts that I pick up from your posts is you are someone that gets stuff done, right? I'm like, she's just closed another angel investor, been for a run, had like 7 9-year-olds over for a sleepover, and and I think that does give investors and also clients confidence, right? That they're buying into somebody that gets stuff done. So, I mean, I'm always a big proponent of personal brand and how important I think that is for founders, both for fundraising and for everything. But in terms of tips and advice that you would give to somebody else that's maybe, a year, 18 months, 2 years behind where you are now, what advice would you give for somebody that's about to embark on that fundraising journey?
Never say no to any investor that you believe is a very good sounding board. So even if someone came to me like, I can't invest more than 2K or 5K, but I would just I can help you with so much. And at this early stage, when I still know that it will be a bit more hassle because the cap table, the investor table will be long, and how do I manage that? I had like 7,000 investors before in the previous business, and it was much harder. So I was like, never say no, because one of the investors that came in with 5K, that opened up for 100K.
Right.
Yeah. So I would say that never say no to someone small if you really like them, or kind of feed the connections and you can help each other on the journey. Have a structure and strategy, and be ready for the no. It's probably 95% no or 98% no. It's hard. It's really hard. It's many times you say, I give up. I can't hear how many different opinions that everyone has on your own kind of baby. And that's hard because it's very few nice calls, to be honest.
Yeah.
And that's hard. You feel more and more, you get diminished very quickly. You get smaller and smaller, and you're trying to kind of, my God, just believe in it. Get in with the money. Like, I'm going to build something. So I think that's kind of, So that's the second part. That's where kind of you said, like, how do you manage everything? Like, I need to go out and run. I need to do my meditation. I need to do my yoga. I need to play with my kids, because life is more than just this money. And, if they don't believe in it, go for the next one. But I think like you need to understand it's hundreds of calls you need to make minimum. And you will find them, but it's hard.
Yeah.
And the third thing is probably that you need to iterate on your story many times. To shape it, and also be ready with, reaching out to the right people around you who will kind of make the introductions. To be ready with a few different blurbs or like intros, depending on who you have to reshape it. You can't just do the chat GTP and then believe that will help you to kind of, create the intros. You have to write them. You have to do it yourself. Like, no one else will do it.
And shape it. And do you mean have different versions of that story for who you're speaking to, or just change it and keep improving it each time?
Exactly, both. So sometimes you have to shape it a bit differently, depending on if it's a bigger investor or smaller investor. Like it's more heart and mind, or like, depending on that. But also if I look at my first deck versus the last deck of presentations, they are in just a few months' time. It's hard. It's changed differently. But then also I would say the fourth thing, it should be the third thing, but the fourth is that set a deadline when you want to close.
Right.
So like I said, like, okay, 31st of Jan, that's my closing date. I reclose before Christmas of these ones because I know that I want to close before. And then I got a bunch of people say, I want to be in. I think you were one of those. And then I was like, okay, I open up people who hadn't really made up their mind just before Christmas. And then I like, okay, until this date, I put all my effort in. Now the last 2 months, I put 10% to close the 3 last ones, which gave me pretty much money. But like, I know that I shifted the focus. So I think you like, again, setting those targets, be a bit flexible, but have those. And then when do I shift? When do I move? And like, yeah.
Yeah. So I suppose then, you know, that's a hard, otherwise it can keep bleeding on, right? And you're
And then if you don't get enough money, because you usually have an ambition, I got from several friends that close it. Like if you don't reach the 500, but you get 300, you usually have a plan A and B, close it and then get going. And then you build. And then, it's shorter than you were imagined to have the 18 months, but like build and then go out again. Even if it's harder because it takes time, but like, close it to focus on a business also.
Give yourself that closure. That makes complete sense. Absolutely. That's great. Anna, thank you so much for all of that. Thank you, everybody that's been listening. And thank you to Anna for sharing her experience and advice with us. It's been super useful.